The U.S. stock market is experiencing a notably volatility today due to the ongoing trade tensions and concerns over inflation. Today, the market is under pressure, primarily due to the escalating trade tensions with China, particularly regarding semiconductors exports. Companies like NVIDIA and AMD are feeling the impact, with NVIDIA stocks dropping significantly after new restrictions were announced. The Federal Reserve concerns about inflation stemming from these tariffs have also contributed to the market unease. The S&P 500 and the Nasdaq has seen a substantial decline, while sectors like technology are particularly affected. Conversely, healthcare stocks like Eli Lilly are all performing well by the positive trial results for a weight loss drug. Overall, the market is reacting to a mix of geopolitical and economic factors, leading to a cautious trading environment. And we got the up and coming events. On 4/20, you got the earnings report. Major companies will report earnings which could influence market segments and stock prices based on performance relative to expectation. 4/25, you got the Federal Reserve meeting. The Fed will discuss interest rates and any changes guidance could significantly impact market directions and investors' confidence. 5/1, you got the economic data release. The key economic indicators will be released, providing insights into inflation and growth, which are crucial to market stability. The U.S. imposes ban on chips imports to China, hitting NVIDIA and AMD. The U.S. has banned exports of chips to China, significantly impacting NVIDIA and AMD. This move escalates trade tensions as it has led to decline in the stock prices, reflecting broader market volatility. The Federal Reserve Chair Powell signals no immediate rate cuts. Jerome Powell comments on inflation and economic growth has raised recession fears among investors. His firm stands on inflation control suggests that interest rates may not be cut soon, affecting the market segment. The S&P 500 experiencing death cross amid market declines. The S&P 500 has formed a death cross, a technical indicator that historically signal further declines. This development has contributed to negative segments in the market and has investors react to potential downturn. And so that's your morning brief. And the Fed chairman on yesterday decided that he was not going to rescue the market by getting it by cutting the Fed rates on yesterday. And so he just say he's just gonna let things be the way they are, which probably could loom a recession in the economy. So let's look at the portfolio this morning. It's actually up $62.09. Investing this morning $14,000, a little over $14,000, with a buying power of $3,029.06. So actually, I'm just sitting on the sidelines, and I'm still collecting, making a small profit. It's not that big, but it beats nothing at all, and it also beats losing. So when I see something, then I go ahead and invest in it. But now it's time, if you have a small portfolio and you're trying to build your portfolio and you have cash on the side, don't let this don't let the movements of others, or the fear of others, or the uncertainties, or the volatility of the market stop you from building up your portfolio. When others are fearful and pulling back, then you should be buying. And when they are in a mood to buy, then you probably should be pulling back. So you need to be doing just the opposite of what you see normal and average everyday people are doing. A lot of these people are giving you advice, and their advices are off of a 401k that they have from an employee. And if you have a 401k, you're not. It's not the same thing as what I'm doing. I'm a individual private investor, and so I have control of my own portfolio. I can take money out. I can put money in at will without being penalized. I can do option trading. I can do day trading. I can do swing trading. I can do futures. I am totally in charge of my own financial destiny. A 401k is not the same thing as what I'm doing. A 401k means that you are working for an employee, and that employee probably probably have that investment retirement part of your portfolio. It probably has a company, outside company that's actually in control of your 401k. It could be some kind of investment firm or something like that, a hedge firm or somebody like that, and they are in control of your 401k. And so this is not the same thing what I'm doing. 401k usually take years and years to build up, and it's probably going to be more of something on a really safe level. It ain't going to be nothing too risky. And then most of you that are in the 401k, you're talking about probably 20 to 30, maybe even 40 years of investing in the stock market, with such a strategy. And so that's a win-win situation. But when you are a private individual investor, then your control of your financial future is in your hands, and not in the hands of a investment firm or a hedge fund management. And so you'll want to keep on buying and keep on purchasing stocks, whether they up or whether they are down. When they are down, that means that you are getting that, you are owning that purchase at a reduced rate that that is currently available. So you're getting it on sale. Same thing if you go into a store and the store has a sale going on. You run to the store in order to capitalize on that sale that's going on. Same thing in the stock market. The market is down due to the current government administration at a trade war, or in a trade war, mainly against China. So sooner or later somebody gonna have to come to the table and come up with some kind of deal, instead of just continually to hurt the market. 'Cause the stock market is it is a worldwide thing. It's not just the United States. It's a whole collective of countries that actually makes up the stock market. And the U.S. has their own version, like the other countries have their own version, but still they are climb with each other. And so you cannot hurt one without hurting all the rest of them. So even though the market is down, like I said, you should be buying. That's why I'm still buying, just not regularly. I'm definitely not doing any options, because you don't know which way the market is going to move with all these tariffs and things like that in place. Eventually, the market's going to rebound. It's going to come back, and all this stuff hopefully will get settled. But until then, we had to just kind of ride this thing out and see what happens. And if you are a long-term investor, then you don't have anything to worry about if you don't need your money right here and right now or today. A long-term investor could be, 4, 5, 6, 7, 8, 9, 10 years from now. 4, 5, 6, 7, 8, 9, 10 years from now, we're going to have a different government administration. Because, this guy, he ain't going to be in the office forever. So eventually we'll have a new administration. Hopefully before then, they will come to some kind of agreement with China with these tariffs in place. So we have quite a bit of green this morning. It's not too bad. I have 227 items, 227 holdings in my portfolio. Tesla is, we got 4 days left for Tesla Q&1 25 earnings call. Right now it's trading at $242 and some cents. It's up by 93 cents this morning. And I have 14 positions, and there are market value is $3,568. Total return today is $12. It's going up so fast, can't even keep up with it. But it's still negative. Right at $1,100. And so we're going to continue to hold that in our portfolio. Metal Facebook is trading at $504.85. It's up this morning by $2.53. Boeing Airlines is up this morning by $2.54. It's traded this morning at $159. I currently have 3.991 position. Market value of $622. So far, I made $10 this morning. Still negative 30. Goldman Sachs, I got 1.6 shares of it. You can see Goldman Sachs it's pretty expensive. $500. It's up this morning by 608. Current market value in my portfolio is $811. And so far this morning made 9.73. So the more of these shares that you own, the more return you will get off of them. And the idea is to try to build up your portfolio to where you own at least 100 shares of your favorite company. But you definitely want to have be well diversified. Being well diversified when the market is down, even though your portfolio is going to get hit, you being well diversified will keep you from losing all your money or losing all your profit, because you don't have all of your eggs in one basket. So we got Apple here is trading at 195.89. I currently have 6.7 shares of it with a market value of $13.24. Total returns $11.83, negative 205. Still, Google, I got 106 shares of Google. Trading this morning at 153.79. It's up today by 42 cents. I have 106 shares. The value at $16,450. So the total return today is $50.21, but it's negative 600 some dollars. And so I'm a long-term investor, even though it's negative today. It's not going to be this way next week or next month, or a year from now, 2 years from now. So I'm going to continue to invest in the market. Amazon's trading at 175.37. It's up this morning by $1.06. I have 6.1 shares of it. Market value of $1,073. Let's see. AMD, which is still very, very affordable for right now. It's trading at $88.52. AMD is a semiconductor chip company. I have 4.9 shares of it. The value at $441. Even have McDonald's. McDonald's at $3.08. It's down this morning by $1. And I don't even have one complete share of it. I have 0.45 shares of it for market value of $138.88. Netflix is trading this morning at $972.98. It's up this morning by $11.35. I have 0.4 shares of it, value at $3.90. Of course, I'm not going to buy a whole share of anything that's over $1,000. I'm not going to buy a whole share of that, any stock that's that expensive. But I will, through the Robinhood app, buy what you call fractional shares of it. That way that I can still own part of it. But even though I'm not gonna never buy a whole share of that kind of that expensive. Cause that kind of money, $1,000, man, you can buy 20, 10, 20, 30 shares in your portfolio if you have $1,000 to spend on one stock. So now you definitely don't want to do that. No, Walmart is trading at 92.35. It's up this morning by $1.16. I got 3.4 shares of it for market value of $3.14. It's up so far I made $3.99 this morning. $4 now. And S&P Y. It's also expensive. If you want to, just take all your money and invest it in the S&P Y 500. That could be a very safe haven as well. The S&P Y 500, it does outperforms the market as a whole. This morning is up by $2.89. I currently have 3.6 shares of it with a market value of $19.37. So this morning I made $10, still negative $165. And these are all the companies that are in the in this fund. You got technology, healthcare, communication, consumer defense, utility, financial service, consumer clerical, industry, energy, and real estate. Then you go over here and hit the top 10. And in the top 10, you got Apple, Nvidia, Metal, Alphabet Class A, Alphabet Class C, Microsoft, Amazon, Berkshire Hathaway, Broadcom, and also Tesla. So you cannot go wrong with having the S&P Y 500 in your portfolio. Matter of fact, that's what you need to have it in your portfolio, the S&P Y 500. And then you turn around and get each of the individual tech companies. You put them each individual in your portfolio as well, along with the S&P Y 500. See, Nvidia though is down this morning by $1.99. It's trading at 102.5 or 47. I currently have 130 shares of it. Market value of $13,349. So for the day it's negative 278. Total 2767 negative. And you got the NASDAQ. I don't own too much of it. It's trading at 72.59. I currently own 4.84 shares of it with a market value of $351. You got the Dow. I don't own too much of it right now either, but I'm going to change that in the future. Got 3.7 shares of it, a market value of 106. QQQ. It's excellent stock to have in your portfolio. I don't own too much of it right now. 0.82 shares of it. Market value of 364. Pioneer, trading at 93.86. It's up this morning by $1.13. Still, we have 17 days left for the Q1 2025 earnings report. I have 117 shares of it. Market value of $11,000. So far this morning, I made $129 or $136 now. So total on 1267. And this is one of my most successful companies that I have in my portfolio. Pioneer, Nvidia, and Google, and then Tesla, and the S&P Y 500. And also SoFi is down. It's been hit hard, but still I still have SoFi. Berkshire Hathaway too. Berkshire Hathaway is, as you can see, look how expensive that stock is. No one can ever own one share of this company. Look at it. It's up today about $6,484.62. I mean, who can own such a company? But still, you can do Robinhood, buy you a fraction of it. Even just buying you a fraction of it, you could still profit off of it just by buying a fraction of it. Just say I turn around and bought $10. Okay, fraction share. Okay, fraction share is not available on this. So they do, but they do have another version of. I'm not gonna want to say that because I bought fractional shares before on this. Let's see. For some reason, I was not allowing me to do that today. I bought a fractional share before, because that's why I got the market value of 309 off of this fractional share. So sometimes you can, I guess sometimes you can't. So let's scroll down to the bottom. Let's try to find the cheaper, normal version of it. Because they have two versions of it, Berkshire Hathaway. So here's the other cheaper version of it. And it's trading at 520.23. I currently have 0.61 shares of it with a market value of $319. So this is an excellent company for average everyday individuals to to invest in. So you cannot lose with investing in Berkshire Hathaway. This is Berkshire Hathaway B. So one thing you want to do, you want to constantly be buying stock and investing, whether it is daily, weekly, or bi-weekly, or either monthly. You want to do that on a regular basis, and that's how you build up your portfolio. You'd be surprised how big your portfolio will become with consistent investing over 6 months and in a year or even 2 years, even better. Okay, let's see here. Is it Clorox? No, it's not Clorox. That's another. Believe it or not, this is another company to have in your portfolio. Clorox. This company is always up, and it's I thought I had some of it in my portfolio. I guess not. Clorox engaged in the manufacture and market of consumer professional products. It operates through the following business segment: health and wellness, household, lifestyle, and international. The health and wellness segment consists of cleaning products, professional products, and vitamins, minerals, and supplies and supplements, mainly marketed and sold in the United States. So believe it or not, this is an excellent company here to have in your portfolio. And like I said, they are always up and making a profit. And later on, I'll go back and buy more of it. And so it looks like the market's gonna be dipping up and down. It's at the resistance line. It's trading this morning at 13,979.82. It's up. Well, it was up by $24. Now it's down by $5. So, well, mine's back up. So it's gonna be probably doing stuff like this all day long. And so, like I said, this is going to be the last final trade day of the week. The market's going to be closed on tomorrow for Good Friday in celebration of Easter, what you call Passover. And that's going to do it for today's video. Thank you for watching. And if nothing else significantly happens today to affect the market, then I will see you guys again on Monday morning at the opening of the bell. Until the end, I hope for you guys to have a good and blessed Friday, good and blessed Passover. For those of you that are going to church celebrating Easter Sunday, be safe out there. Whether you go to and fro, school, work, or what have you. And we'll see you guys again here on Monday morning at the opening of the bell. Thank you for watching, and we'll see you Monday morning.